You are trying to trade with the volume profile indicator, but you are failing. You have watched countless videos, but it just doesn't seem to click. Well, you are probably using it in wrong way. It is time to go back to the basics and truly understand how this indicator works. Volume profile indicator is a powerful trading tool that displays the volume traded at specific price levels over a given period. Unlike traditional volume indicators that shows activity over the time, the volume profile gives you a visual representation of where the majority of buying and selling happens, helping identify key price levels. The main purpose of this indicator is to spot high volume areas, also known as point of control, and low volume areas that can indicate potential price rejection or breakouts. It is a game changer for understanding market structure and fine-tuning your entries and exits. It is important to note that there are different variations of volume profile indicators available. However, the key is that all of them provide only the most relevant key levels in the markets. Some are free while others require subscription. In this video I will show you my favorite version of volume profile indicator, and the best part, it is completely free. If you are a beginner, don't worry, I will guide you step by step on how to add it on your charts and how to use it. If you want to learn everything about this game-changing indicator, stay with me until the end of this video. For the purpose of this video, we will use auto-anchored volume profile. This indicator is completely free, and I guarantee you will never feel the need for a paid version. This free version provides everything you need for professional trading. Before we continue, let me show you how to add the volume profile on your charts on the most popular trading platform, TradingView. First, open the Indicators menu, then click on Technicals. In search bar, type auto-anchored volume profile, then click on indicator. After this, indicator is applied on your charts. To understand how this indicator works, it is important to explain all the components. The indicator is based on two main components. The first component is volume nodes. These are visual representation on the chart showing where high or low volume of trades occurred. The second component is POC, which stands for point of control. This is the price level with the highest volume of trades over a selected period. Additionally, it is important to measure two other key levels: value area high, which represent the highest price level within the value area, and the value area low, the lowest price level within the value area. We have high volume and low volume nodes on volume profile indicator. High volume nodes represent price areas with the highest trading activity. Visually, they appear as a peak on the volume indicator. Point of control, which is the price level with the highest trading activity during a given period, will always be located at the highest volume node. High volume areas are also known as a balance zone or consensus areas. These are price levels where buyers and sellers have already shown a willingness to conduct transactions. When the price revisits these high volume areas, we can often expect slower price movement, likely resulting in consolidation. This is because the market has already demonstrated a strong interest in these levels, making them areas of price accumulation. These levels are crucial for us as traders because positioning our trades at the price accumulation zones allow us to capture significant moves when the market price eventually expands. On the other hand, low volume nodes are visually represented as valleys on the volume profile indicator. These areas are just as important, but for different reasons. When the market revisits these zones, there are typically two possible scenarios. In the first one, price gets rejected, bouncing off the low volume area. In the second one, the price moves straight through the zone aggressively and quickly with minimal resistance. Are you wondering what value area high and value area low represent? These levels help us to identify potential support and resistance points, as the price often reacts at these zones. If the price moves above value area high, it is suggesting strong bullish momentum, while drop below the value area low indicates bearish sentiment. However, you don't want to trade these levels, because the price has already expanded too much. The best way to use them is as potential take profit zones. It is time for most exciting part of this video. How to use the volume profile in any trading strategy. Most traders use this powerful indicator the wrong way, perhaps because it is easiest approach, or they simply don't understand how the indicator truly works. Typically, traders use point of control, value area high and value area low as support or resistance levels. However, this is a mistake. The point of control represents the area with the highest trading volume among all market participants. This signifies a price accumulation zone, where the price tends to consolidate. In other words, after accumulation, the only logical outcome is price extension. To use this indicator effectively, here is what you should do. First, wait for the price to revisit the point of control area. Second, use your strategy and entry models to determine the direction of the upcoming price expansion. 3. Monitor low volume nodes to see if the price accelerates in your chosen direction through these zones. And finally, 4. Use the value area high and value area low as a take profit zones. One piece of advice regarding these take profit zones. Don't place your take profit level exactly on them. They are simply a guide to help you determine where to set your take profit based on your exit trade strategy. Let me try to explain everything in the simplest way possible. We always need to wait for the price to revisit the point of control key level, as this is where the highest trading activity occurs. We only want to trade the high volume zones. In these zones, we need to use our entry models to decide are we going to buy or sell. Your entry model can be anything: trend lines, candlestick patterns, moving averages, and so on. Let's say you enter a sell position in this example. You will need to manage your trade. You can use low volume nodes as a take profit areas, since the price may reject on these points. Alternatively, you should monitor low volume nodes to see if the price will continue in your direction. If the price does continue, you can use this value area low as your take profit level. This is the correct way to trade volume profile indicators. Since this video is just a guide on how to use volume profile indicators without exact strategy, please don't forget to subscribe and hit the notification bell, as I will be posting more videos with specific trading strategies based on volume profile indicators in combination with high probability entry models. Thank you very much. See you next time. Bye bye.